Okay, I don't know what the fuck just happened. But the whole video just fucking got deleted, I guess. Luckily, I was only about 5 minutes in. But basically, I got a comment on my previous video. Alright, so somebody said, can you make a video explaining the basics of trading for beginners? I'm thinking of starting trading too, but the majority of videos are just trying to sell a course or scam people. Alright, so the first thing I want to say is, I guess that's somewhat true. A lot of people are trying to sell a course, but what you need to understand is you shouldn't have the mindset that everybody's trying to scam you. Like from the jump, I'm gonna attack your mindset real quick so you can learn faster and you can progress more. My mindset going into this shit was, damn, this nigga might not be a real trader, but I'm gonna learn what the fuck he's teaching and I'm gonna go and see if it works through backtesting, through doing the work. And if it works, cool, I found my strategy. If it doesn't work, I move on to something else and I just gain some experience from what he taught me. Even though it was some fuck shit, even though it didn't work, I still gained experience. I still learned something, right? So number one, fix your mindset. Understand, like, for y'all people who so scared of being scammed and shit like that, bro, it's, if you go hard at this shit and you just use your intuition, even if you get scammed a couple of times, eventually you'll get through all that bullshit and you'll be able to see what's real. The faster and sooner you get through that bullshit, the easier it is to see what's real and what's not, and the easier it is for you to start propelling onto your journey. So first off, get that shit out your head. Don't emphasize too much who's scamming, who's not, who's real, who's not. Use your intuition. All right, that's number one. All right, now when you learning how to trade, right? Let me get the typing tool out. When you learning how to trade, you got technicals, technical analysis. That's the first type of trading, or the first aspect of trading. You got fundamental analysis. All right. And you have psychology. We can add risk management to this. Risk management. All right. So these are the 4 things you need to learn. Now this, honestly, this is more about stock investing, crypto investments, shit like that. Long-term investments, that's where you want to use fundamental analysis. If you're a day trader like me, where you in the markets for 5, 10, 15, 20 minutes, sometimes an hour, shit like that, you don't really need fundamental analysis at all. Now, you need a general understanding of what's going on in the world. That will help you. But what you will find is, if you can read the charts, it will tell you what it's going to do, even before the world events happen, which is weird. It's a little interesting, bro. Like, let's say NASDAQ. Something will happen like a war, and NASDAQ will plummet. Like, actually, let's take a look at it right here. This was in August. Peep this shit, right? So look, we dropped damn near 10%, which is what the average, this is what the S&P and the NASDAQ average over a year is, around 10% gain, a 10% return. This shit dropped 12% in what? 1, 2, 3 days. Now, if you knew how to read the charts, you could kind of anticipate this, because we were already in a downtrend. We came back up into this weekly imbalance. This daily imbalance. Came right up into consequent encroachment, right? Rejected that shit. Let's make this black. Rejected consequent encroachment, and then we sold off. And the weekly had just shifted structure to the downside right there too. So that's what I mean. If you learn how to read the charts, it doesn't matter what happens in the world. It's normally going to align with what's already in the charts, which makes you question, what the fuck are we really doing? Like, what is this shit for real? Like, what? It's weird. But anyways, so you need technical analysis. You need to learn how to read the charts. That's really step 1, because if you can't do that, psychology doesn't matter, risk management doesn't matter, because you don't know where to apply risk and you don't have a chance to use your psychology, right? Boom. So first thing you need to learn is technical analysis. Now, what falls under technical analysis? Like, how do you find a strategy that works? Research. You just have to research. So, what I did when I first started, I'm gonna pull this notebook out right here. This notebook has so much shit in it, bro. The first thing I did, I wrote down every fucking question I had. My bad for the cursing, I'm sorry, but y'all just gonna have to deal with it. I'm not super professional on this channel. It's my channel, so you feel me? You get what you see and you like it or you don't. So look, the first thing I did was write down every question I had. It didn't matter what it was, the most basic questions. I remember one of the questions I wrote out was, what is an indice? I didn't even know what that shit was. I didn't know what time New York session started. I didn't know what the different sessions were. I didn't know what a pip was. I didn't know what a lot size was. You feel me? So write down all of your questions, even if you know nothing, and start to research them on YouTube. All right? Actually, before you even do that, this is really what you want to do. Baby pips. Now, this is not going to teach you how to trade right here. But it's going to teach you all the basics you need to know. It's basically gonna get a lot of those questions out of the way, right? They have so many courses and videos. You got preschool, kindergarten, all the way down to college? Graduation. They go through the college and all that other shit, right? Go through this. I probably went to like elementary, and then I stopped, and then I just learned everything else on YouTube. But definitely go through preschool, definitely go through kindergarten, and I would go through this too, even though you're probably not gonna use none of this shit, cause I don't use any of this shit. But it's gonna get all those little questions you have out the way. So boom, start there, babypips.com. Next, start writing down every fucking question you have about the markets and research them. It's going to take some days. Eventually, you'll get to a point where you're getting more confident. And the next thing I would research is how to read market structure. All right. So there are so many different ways to read the charts. Like breaker structures, all different types of shit. There's so many different ways to read this chart right here, and none of them are necessarily correct. They're just different ways of perceiving the same shit. Find one that makes sense to you, that you can go through and backtest and understand, that actually works over a long period of time, right? So how to read market structure, how to read candlesticks, day trading strategies, just shit like that. It's honestly, I should probably put this as number one. All right. Once you learn how to read the charts a little bit, to where this shit doesn't look completely fucking foreign to you, to where you have a basic understanding of what's going on, you need to research a day trading strategy, right? Find a strategy that you like. All this shit is up to personal preference. Once you do that, you need to go on TradingView. I didn't even break that shit down to y'all, but fuck it. There's certain things y'all just have to figure out. You need to come on to TradingView where I'm at right now. This is tradingview.com. This is just the app version. You need to get the basic plan that they have, because that allows you to go on replay mode on the lower time frames. If you have any questions about what I'm saying right now, write them down and research them. If you don't know what a time frame is, I can't break everything down for your ass, bro. But you need to get the basic plan so that you can go down to these lower time frames on replay mode. Then what you're gonna do is you're gonna replay the market like this, and you're gonna try and see if you can find setups. All right, so when you go to backtest, the first thing you want to do is make sure you are trading within your time frame. So you need to understand what session are you trading. That's very important. You should not be on the charts all day looking for trades. My recommendation is that you're only on the charts. Now, when you first start, I was on the charts for like 5-6 hours a day. So it depends because you need that market experience. But I would say trade from 8 to maybe 12. That's 4 hours. That's a long time. But like, let's say you're trading Forex. I would say trade from 8 to 12 if you're trading New York session. You don't trade until 8 o'clock. So you should not be back testing different times because the market moves differently in different times. So you just want to scroll through until you get to your time frame or to your session. Boom, your session starts. Now you can start looking for trades and applying your strategies. So, boom. You just looking through this shit. Oh, we broke structure right here. We got a fair value gap. Okay, boom. Let's pretend we tried to enter right there. We got stopped out, right? When you're back testing, what you want to do is you want to take a screenshot. Press this right here, copy link, and then what you're gonna do is get you a back testing journal on Google Sheets. Now I don't back test anymore, but what I would have done if I was still back testing is I would come here. Damn, I ain't been on this journal in mad long. I would come over here, boom. I'll paste the screenshot of the trade I took right here so I could show it. Then I would explain why I got into the trade. I got in because of a break of structure and FVG. I lost because I didn't check the higher time frame. This is just a simple example. You want to go way more in depth than this, even though I didn't really go in depth back then for real. Record if it was a win or a loss, the RR, the confluences, what time you took the trade, the order type, all that shit. You need to track all this shit. And that was on Monday, right? I was doing this for all of these shits. I probably have like 5 years of back testing data in here. But I haven't back tested in probably like fucking 5-6 months. I ain't gonna lie to you. I just don't do it anymore. There's no need to. So that's what I would do next is start back testing. You back test because you want to see if the strategy actually works, right? You want to make sure this shit is valid. Like you can apply it. It works over time. After you learn how to read candlesticks and market structure, you start researching strategies. Once you find a strategy that you think is good, you start to back test. You write that shit down in your back testing journal right here. And you record your data. Back test every fucking day, bro. Every day. Until you understand your strategy. Now, that might have sounded like a lot, but this right here is literally 10% of trading, bro. It'll take you probably 3-4 months to learn a strategy and get good at it. If you do it right and if you back testing like 4 or 5 hours a day, minimum. Once you do that, now you need to focus on psychology. This is the most important part of trading, and this is the reason why some people can become profitable in a year, and some people it takes them 10 years. All because of psychology, the way you think. So I'm gonna give y'all a couple of psychology tips. I'm not trying to break this shit down. I'm really just trying to let y'all know what you need to know, what you need to research in order to make this shit work, in order to become profitable or become a trader. These are the things you need to research. I'm not going to break it all down and teach you everything. That shit would take way too fucking long. But psychology, I'm going to give y'all some tips. Number 1, do not worry about making money. And this is why psychology is so hard. This is the number one thing. Yeah, everybody gets into trading because they want to make money. Nobody just comes to the charts because they fucking love it and it looks cool. It's like, oh, I can make a lot of money doing this shit. If nobody made money off these charts, I would not be on this shit. I started because I was like, damn, I can make money sitting on my phone that fast. But when you worry about making money, that's when you start to fuck up. Your mind plays tricks on you. You see certain things that aren't actually there. You feel me? You'll revenge trade. You'll overtrade. You'll trade too much. shit like that. So the next thing you want to do is you want to make a trading plan. This trading plan should consist of what time you trade, how many trades can you take a day, how many losses before you get off the charts, what percentage of your account are you willing to risk. This is risk management. This part is risk management right here. Whoops. This is risk management, which is very important. But I'm just going over the plan. What percentage of the account are you willing to risk? What needs to happen in the market in order for you to take a trade? Now this question right here is essentially saying, what does the market have to do to give you enough conviction to apply risk? That's all it's asking. What needs to happen in the market before you take a trade? What does the market need to do to give you enough conviction to apply risk? What does the market have to do to show you it's more probable to move up than to move down, or to move down than to move up? All right. All of this shit is subjective. This is why trading is so difficult, and there's no right answer or wrong answer. You have to figure all this shit out on your own. This is why market experience is important. All right. So now let's get into risk management. You have a trading plan. You have a little strategy that you learn. You getting into psychology. You're reading Trading in the Zone by Mark Douglas. I'm gonna put that up right here. That's a great psychology book. So don't even take this as a step-by-step list. All right, don't even take this as a step-by-step list. Just understand all of this shit is important. You're going to need to learn all of this shit. Risk management. Now, the reason risk management is so important is because you can have psychology. You can have the trading strategy. You can have everything you need, but you lack risk management. Now, why is this shit so important? Because you could take a trade, right? And you take a loss. Right? Boom, hits your stop loss. Let's say you lose $10. All right. Then you take a trade. Again, this time you win. But since you lost, you got scared and you decided to put less money in right here. Boom. Now you only win $5. Then let's say you win again. This time, since you won, you feeling good about yourself, you risk a little more. Boom. Now let's say you make $15. Right? So in all of these trades, you risking something a little different. So you just won twice. And now you really up $5, right? Let's say you lose this time. You take a short, you thought the market was going to dump. Boom, we come so close to your TP, and then we just reverse, and you get stopped out. You were so confident off of these 2 wins that you decided to risk your full account on this trade. This all has to do with psychology too in a way, but let's pretend your psychology is perfect. Not every trade is going to win. Everything could have aligned in this trade. And you like, I bet. I'm going to put everything down on this. Everything aligned, but still the market it's weird sometimes. You will still lose on a setup that had everything going right. So boom. That's why you also can't worry about the money. Boom. You lose your whole account. Let's say you had $100. Minus 100. Now if you peep this, our risk to reward here was 2R. Risk to reward here was 1.3R. So theoretically, let's pull out the calculator. 2.6 plus 1.3. We should have won 3.9 what we were risking. So if we only lost once, we should still be up 2.9 times what we risked initially if we were risking the same amount every time. But since we were changing our risk, this isn't the case. Right here, we were only up $5 after these 2 trades, or after these 3 trades. And then you take another loss and you lose 100. So in reality, we should have been up 1.9 R still. We should have still been in profit, even though we had 2 losses and 2 wins. But since your risk was not consistent, your whole account is gone. All right, so that's a little basic. That's a little basic breakdown of the basics you need to learn about trading. All right, let me grab this shit again. You need technical analysis. You need to learn how the candlesticks move. You need market structure. You need to learn how to read market structure as a whole. Then you need to find a strategy and backtest. All right. After you do that, really right after that, you should make a trading plan. Figure out what time you should trade, how many trades you take a day. This is part of your strategy, by the way. What time you should trade, how many times you should trade a day, how many losses before you get off the charts, what percentage of your account you're willing to risk, which has to do with risk management, and what needs to happen in the market in order for you to take a trade. Basically, when you first start, you want it to be a checklist. Like, number 1, we need a higher time frame. Find higher time frame bias. Are we going up or down on the higher time frames? Number 2, find lower time frame bias and make sure it aligns with the higher time frame. Number 3, wait for, actually let's do middle time frame right here. Wait for a lower time frame retracement into a key level, and then a break of structure back into alignment with the higher time frame. Take a trade. This is just a little basic step-by-step plan. Don't use this. It needs to be, I mean, you can use this. This ain't bad, but this isn't how I trade. Find the higher time frame bias, like the daily. Go to the middle time frame, like the 4 hour and 1 hour. Make sure it's in alignment with the daily. So let's say the daily is going up, the 4 hour and 1 hour is going up. Then you go down to the 5 minute, for example. You wait for it to retrace, meaning since everything's going up, you wait for the 5 minute to push down into a key level. And then when it breaks structure back to the upside, that's when you take a trade. So that's what I say, what needs to happen in the market before you take a trade. You need a plan like this. Then you need to learn how much are you going to risk on each trade. Let's say 1 to 3%. So let's just say 1% per trade. Now, all of this shit gets deeper, but these are the basics for the people that don't trade yet, that are trying to understand what to research. If you're new to this shit, I would say risk the same amount every single time on every trade. Now, once you get more experience like me, I might cut my risk in half because I'm a little less confident on the setup, or maybe it's a no news Monday or some shit like that, or it's FOMC. On those days, for y'all, I wouldn't even trade, but you need market experience, so fuck it. Load up a little $100 account, risk $1 per trade like I did. I did that for 7 fucking months. And just try and perfect your strategy and get your psychology down. I would say risk 1% per trade. See, if you were risking 1% of this $100 account, right here, I'll show y'all why risk management is so important. You would have lost $1 right here. Boom. Right here, you would have made $1.3. You would have made 1.3 $3, $1.30, right? Right here, you would have made $2.61. $2.61. And then right here, you would have lost $1 again. So now let's do the math, right? You made $1.33. You made $2.61. Then you lost $2. You still would have been up $1.94, even though you lost twice and won twice. But if you don't have risk management and your dumb ass is doing shit like this, where you risk 10, then 5, then 15, you see what I'm saying? You risking all different types of amounts. You might end up blowing your account when you wouldn't have if you just had risk management. So risk management is actually probably the most important thing after psychology. I'm not going to say it's the most important thing. All of these are very, very important, and they all come together to make you a good trader. But if any of these are missing, if technical analysis is missing, if you don't know how to read the market, if you don't have a trading plan, if you don't have a strategy, if you don't have psychology, if you don't have risk management, if a single one is missing, you can't make it. You're not going to be profitable. Can't make it. Won't be profitable. Won't be profitable. Won't be profitable. Won't be profitable. Everything has to add up together. This is the equation right here. This plus this plus this plus this plus this equals profitability. You need all of these, bro. Make sure you got all of this down. These are the things you need to research. Technical analysis. Psychology. You need to backtest. You need to create a trading plan. You need to learn how to manage risk. I would say risk 1% of your account on a trade. Now, these are the basics. This is not going to make you profitable by any means. I'm sure this video was all over the fucking place. I'm sorry. I'm not the best teacher, but I hope this fucking helped y'all, man. I hope this helped y'all. Y'all be good out there and put the work in, man. For real, put the work in. I was really going hard. The first 7-8 months of this journey, I was going hard as fuck, bro. I swear to God, I was backtesting like 5 hours. I say this shit all the time, but just understand I was going hard. If you want a step-by-step breakdown on how hard you should be going, your whole life should be trading and making money. You should go to work, go to the gym, trade. That's it. When you first start. Now I'm at a point where if I did all of that, I would be unprofitable. Because eventually you learn everything you need to know, and then it's just about mastering your mind. And that comes with trading less, being on the charts less, not worrying about what the market is doing as much. Because now I already know how to trade. I just have to do the right things and remain intact up here. You see what I'm saying? There's nothing more for me to learn in the markets. I already know how to manage risk. I already have a trading plan, and I have this little step-by-step shit. You feel me? I already know how candlesticks move. I already have months and months and months and months and years of backtesting data. You feel me? Now it's just about applying what I know and being in the markets as little as possible. But when you first start, you have to put in them hours. You have to be on them charts for hours and hours every day. 12 hours on the weekends, 12 hours on Saturday, 12 hours on Sunday. It's necessary. You have to be obsessed with this shit when you first start. Eventually it becomes bad and you shouldn't be obsessed with it no more. You need to pull back. But if you want to make this shit work, you got to go hard in the beginning. So that's all I got for y'all. I hope this helped y'all out. I hope this answered my guy's question. Y'all be safe, man.